Welcome to the Chiefs. I'm Lucy Cruz Valdez of News 5.
I'm Edwin Gao.
I'm Ami Paminton of the Philippine Star.
At ako po si Robbie Alampay. It's December 30 and towards the end of the year, parang ito ulit yung pinag-uusapan pa rin natin.
Ito pa rin,
Maharlika
yeah.
Wealth Fund.
Will we become wealthier with a wealth fund?
Will we get 7%?
Well, nagkaroon naman ng several weeks ang Senate to think about it, no? Dahil inaasahan naman natin yung pagpasa ng ng House of
expected.
Representatives.
Action will move to the Senate.
Yan na nga.
But
Tingnan natin.
this past not year, but at least the past weeks, heading into the end of this year, parang ang dami pa rin mga tanong ng mga tao tungkol dito, both on the fiscal side as well as on the governance side.
Yan na nga.
Siyempre, pera yan ang bayan di ba? So, pat talagang maghuhunos dili ka, teka lang. Tsaka, ang impression nga ng lahat is, bakit natin minamadali pa rin, di ba?
And do we have the funds for it?
Yeah.
Diba? Meron
Do
ba
we have
tayo?
the funds for it? And actually, ayun nga, I've heard a lot
Saan
of
natin
people...
ilalagay?
Oh, and I heard a lot of people also saying you could strip out all the technicalities and you can revert to actually yung batikos ng mga politiko naman sa mga tao. Eh wala lang yata kayong tiwala sa amin eh. Actually, for a lot of people,
actually, yes.
yan talaga. Parang,
It's a trust issue.
why is that not a legitimate issue? And a lot of people are saying, why can't you start with that? Which goes back to your question, ba't pa kayo nagmamadali?
Okay, kaya kita nyo naman, hindi pa talaga tapos ang usapan ukol sa Maharlika Investment Fund. As we always say here on the Chiefs, we hope to keep the conversation going.
The Government Service Insurance System, or GSIS, insists that it will only invest excess funds into the proposed Maharlika Investment Fund.
Meron tayong pera, ngunit hindi ho natin nagkakaroon ng calculated risk. Masama ho bang makahingi ng buntot ng manok at maipakain natin to improve the benefits of the Filipino people?
Our foreign exchange reserves are dwindling. In fact, my colleague Ronnie Bernardo is expecting our international reserves to fall again by next year to about 8 to 7 billion from about 90 plus, no? Again, because of our current account and trade deficits.
GSIS President and General Manager Wick Veloso assured that pension funds will remain untouched.
Marami po nagtatanong about transparency on this initiative. Meron po tayo ditong board. Kami po ang nandoon sa board of directors.
Gipa ni Veloso, para lang din daw sa kapakanan ng mga Pilipino ang kikitain ng Maharlika Fund.
Will it move the needle if we ask for a small amount so that our kababayans will be freed from the bondage of being in a developing country all their lives?
What they're making us believe, or at least that's what I'm hearing, is that this is the best time to invest because stock prices are low and they have nowhere to go but up. So if we don't move now, we're not going to see our funds increase at the rate that they could possibly go. Is that a good reasoning?
For me, I don't think they know better than us in the sense, Lucina. Marami rin silang mali ang kanilang growth rate prediction. In-adjust naman nila. And they're not perfect din eh. Mali din yung kanilang, halimbawa, yung bill nila, i-cover yung foreign currency reserves. Binawi nila kasi unwise pala. They're not really...
Infallible.
In fact, they're just pushing this because favorable sa presidente, favorable sa principal nila. So para sa akin, mas yun pa yung dahilan na bakit nila pinupush ito. Kasi sino ba naman papayag? Magkakaroon tayo ng loop ng investment funds, ang safeguards tinanggal. The bill itself says regulatory restrictions do not apply to this fund. Pag ikaw banker, pag ikaw finance, somebody who is going to advise you, invest tayo dito, walang tinatanggal dito ang regulatory restrictions like bidding and so on, di ba? I-review ng OGCC certain financial transactions of government to ensure na walang corruption, tanggal yun, not applicable. Siyempre, hindi ka mag-i-invest doon. Kasi this is a very dangerous kind of situation.
The fund is not subject to government procurement protocols. Neither are the people involved in the fund subject to the government salary standardization. So you can imagine they can buy,
Because
they can buy a castle in Scotland for the Marcos executives to use, and we have no say about it, and they can justify it
but
as a
Andy,
sound
yun nga, yung
government.
reasoning din nila is, Andy, the reasoning is, this is basically an investment, it's a banking thing, and the best bankers' minds are needed for this.
You know,
And
Lucy,
if we're going to subject them to the salary standardization law, this is what they're saying, no? Wala kayo, we're not going to attract the best minds here.
But Lucy, you know
Doesn't that
what?
make sense?
Well, okay, let's put it this way. Even the bankers are against this because the financial executive, FINEX, no? Financial Executive Organization of the Philippines.
Of the Philippines,
Management
yeah.
Association of the Philippines, Philippine Chamber of Commerce and Industry, Makati Business Club, all went on record to say that they're against the fund. It's just not the right time. And at the heart of it are two issues. It's we don't have the excess funds, number one, and there are questions about the justice system. Is there enough checks and balances to make sure that the fund is not
Governance.
abused? Diba?
Yes.
Is a
If you
good
actually,
governance.
if you actually look at the more successful examples of a sovereign wealth fund, the one key principle is to diversify your assets by investing globally. But one of the weirder provisions of the Maharlika bill is that actually it provides for local investments. But this will subject the Maharlika fund to a lot of politicization, as well as it might pave the way for picking winners. Essentially, the government, whether it's the president or the secretary of finance, picking which industries will be invested in. So parang...
But let me backtrack a bit. Kasi kanina we were talking about this is probably a political decision. But a lot of people were surprised that Stella Kimbo, whom a lot of people had relied on to be the check and balance of sorts in the budgeting in the finance system in Congress, is one of the co-authors. And last time I checked, she was still with the Liberal Party. I don't know if she still is. How does that factor in?
I think she recently left. I may have to fact check that. But she recently left, and actually many economists are quite disappointed that she is one of the co-authors.
Okay, so she's no longer with the opposition.
You know, I was saying earlier, sometimes you have to play the short game to win the long game. It's all politics, and that's the only way I can justify Ms. Kimbo's support of this bill.
I mean,
But Andy, isn't this political suicide if it fails? I mean, for
I
example,
think it's suicide
no less than the president is the chairman. Why is he putting at risk the political capital he now has? If there was a chance that this could fail.
I think the bigger issue, rather than political risk, is the risk for the country. We're talking about 250 billion, and this is what?
that's just a seed money.
60%, seed money. 60% of 1 year's GDP. I mean, this is not. It could break the banking system. It could break all our financial institutions. It's. I mean, the risk is
No, but
just
if
too
it's
great.
political, then it's supposed to benefit them, right? I mean, let's face it. The issue is trust. Many people don't trust that these people
Yeah, you know
are
what?
going to work for the funds good.
I think, Lucy-
that they're just going to line their pockets.
I think, Lucy, they believe
Yes.
naman that this will, for them, tingin nila, oh, this is a good thing. So they're not really thinking. In fact, that's why they're doing this and pushing this, because they think, oh, we have a lot of political capital right now. We can do this, di ba? But tingin nila yon kasi sila siyempre ang magbe-benefit dyan. So basically sa akin, we say it's a political risk, but for them, hindi political risk ito. And in fact, they think they will weather this kind of storm.
I mean,
There's this explanation na dahil nga daw sa laki ng utang natin, which keeps growing, dapat daw gamitin na lang tong ganitong klaseng fund to propel development projects. Pwede ba yun? It's a sovereign wealth fund, di ba? Ganun ba function? I cannot understand that explanation. Pero yun yung sinasabi ng iba na para daw mabawasan yung pangungutang natin. Ito ko na lang gamitin to finance certain projects.
You know what,
Tama ba
Ami?
yun?
You're absolutely right. And that is the mandate of the Land Bank. And they're supposed to support the agricultural industry. That's the mandate of the DBP who's supposed to support industry. So if the funds are channeled to what the bank's mandate truly is, a bigger chunk, no? Then that will have a bigger cascade and a bigger long-term effect, I believe. So it's already built in the system. Why reinvent the wheel and have all these redundancies? Even worse, why rush it? Why are we rushing it in 1 week?
In a similar vein lang, President Duterte borrowed nearly more than 6 trillion in 6 years, more than the 5 presidents' loans before him. So ang siguro ang position dapat ni President Marcos is saan ito napunta? Kasi hindi naman ito build. How many projects lang? Parang 19 out of 112 projects na nagawa. Ang COVID response was at least 570 billion. Hindi umabot ng 1 trillion. So where did the 6 trillion go? Baka naman may pera dito na pwede nating magamit instead of going to the taxpayers through budget, through all these sources of funds, kaysa sa pahirapan natin ang taong bayan, hanapin muna I'm still demanding na unless the government can account for the 6 to 7 trillion na inutang in the last 6 years, they have no right at all to get these funds from the people, whether it's GSIS, SSS, or even Land Bank. I mean, I'm a depositor in Land Bank. I don't want my deposits to be wasted in an investment, di ba? So, all these things boil to one thing. Mukhang hindi nila iniisip ang kapakanan ng taong bayan despite their statements that they're doing this for the people.
Okay, JC, before we go to break.
Yeah, I just wanted to add that in some examples, for example, Norway, where their sovereign wealth fund is actually as large as $1 trillion. Kung ganun kalaki yung sovereign fund mo, you can use that very well to finance public works and all that. And pero the problem
we could afford to lose $174 billion.
yeah. And in fact, each Norwegian actually, parang meron silang 13 million pesos na hati dun sa kanilang sovereign wealth fund. Ganun kalaki siya. Pero in this case, parang to begin with, wala tayong surplus. And yun nga, parang if you want to finance public works, there are other ways of doing that. For example, public-private partnerships.
Hindi nagagalawin yung GSIS tsaka yung SSS. Possibly, they'll take the profits from BSP and
Is it even enough?
Land Bank.
Yeah.
That's my question. Does it sound feasible financially? Is there enough there to go by to build an investment fund? Would it even work? Diba? BSP's dividends last year was what, 15 billion?
It could be they might touch the reserves. Because where else will they form 250 billion? So the country's reserves is at the moment below 100 billion. No? So it's a working capital that's just enough. I think that's sufficient for 3 months, 6 months, 3 to 6 months worth of imports. No, that's very thin.
75 billion.
Yeah,
Yes.
we're about 90 something now. No, we're about 90 something now. But bear in mind that, and this I'd like to segue to another related topic, which is there are bigger problems which need Congress's attention and the president's attention, and that is the trade deficit. And you spoke about our current account deficit and our budget. It's deficits all around. Okay, we need a manufacturing resurgence to get exports up. Okay, and that's the only way we can balance the budget. Why are we talking about spending the whatever working capital is there when this is what we need to be doing?
I actually checked the news. So for the first half of this year, the BSB's profits was just about 54 billion pesos. Very small compared to what they plan.
What do they mean by profits? Is it the same as dividends? Or it's different pa?
Smaller ang dividends.
Well, dividends is a fraction of
the profits.
So it's even less than that. So where else will they? How will they? Paano nila ibubuo yung 250 billion?
And what's the risk if they touch the reserves, for example, or if they touch the profits of BSP? What are the risks involved here?
Oh yeah, actually, if you look at the reserves of the Bangko Sentral, it's actually declining steadily in the past couple of months. From about 7 months worth of imports is going down. And importante na, kasi may threshold yan parang 3 or 4 months at least, dapat hindi tayo bumaba dun. Pero we're well on the way to that. And in fact, I think some economists have pointed pointed out na yung international reserves natin ay mas konti na compared sa ating external debt. So in other words, yun yung gagamitin natin na pambayad sa ating utang panlabas and mas konti na yung reserba natin compared sa ating total na utang panlabas. So this is a perilous time if you touch the international reserves, and at any rate, it violates principles of macroprudential principles. Basically, dapat independent ang central bank sa policies of the national government, and this is an accepted principle across the world.
Under what test na lang will a sovereign wealth fund work? Anong mga requirements? Kung sakasakali, best practices. Kasi
Within our lifetime, within our lifetime ba yan?
yung Norway na wala ng pera this year.
South Korea, nawala din ng pera.
Singapore. Pero anong mga requirements kung sakasakali? Kasi sabi ng House ngayon they're working on mga 7 yata or 8 provisions just to reassure everyone na magiging well-managed siya, no corruption. Ano yung mga requirements?
For me, at least two basic things. Number one, you have to have a huge budget surplus. Hanap ka muna ng sobrang pera bago ka mag-invest in something na ipupusta mo or igagamble mo in investments globally. Pero sa ngayon, wala tayong ganung klaseng surpluses to speak of. In fact, may deficit tayo na 6.5% based on the latest statistics that the President himself said he wants to bring down to 3% by the end of his term. Pero how can you do that kung ipupusta mo pa itong malaking pondo na ito? And then I think the second would be good governance. I think you have to earn the trust of people before you come up with this type of proposal. Just to add one more thing, ang nakakatawa, for example, in the case of Norway, meron silang ganung klaseng sovereign wealth fund to pay for pensions of their people. Pero tayo, we use the pensions of the people to...
It's the other way around.
It's the other way around. Of course, binawi na, pero in the first place, it should not have been proposed at all.
I'll add to what you mentioned. Also, a functioning sovereign justice system is a third requirement, apart from the surplus and what you said, good governance.
So will we see that in a lifetime?
I think naman we'll see that sometime in the future. Hindi naman hopeless tayo, pero now is not the time. Ganito
Now's not the
karampant yung corruption. May family lang tayo a few years ago. In fact, sino ba nakulong doon? I mean, di ba? So, hindi siya talaga...
200, PhilHealth.
Yeah, PhilHealth and so on, di ba? Sabi nila, we said independent naman yung board. No, lahat naman yan, independent nga ang Congress, co-equal pa, pero subservient naman sa presidente. Words mean nothing here.
Authors of the measure creating the Maharlika Wealth Fund are proposing further amendments to appease concerns on transparency.
Marikina Representative Stella Kimbo proposed more amendments to the Maharlika Wealth Fund bill. She said the Bangko Sentral ng Pilipinas shall eventually remit 100% of its dividends to the MWF.
Ang suggestion is until ma-fund yung Maharlika Wealth Fund, yun muna ang puntahan ng mga dividends ng BSP.
Experts call for further revisions in the controversial Maharlika Wealth Fund bill.
I think they should remove the provision that only the board of directors can approve access to the records.
We have a lot of bright people there who are able to spot investments. So if we are awarding projects to all of these conglomerates all over from Malampaya to all of this, and we know that their track record of success is high, then why not be part of it, even for just 10 or 20%? So that's the idea that I think is worth looking into.
In your interviews before, you've also called for more prudence and more care. In fact, you do sound very, very cautious as far as making decisions on this matter is concerned, to Maharlika Wealth Fund. Pero sir, I'm sure you've also heard that they've done some amendments, or they're doing some amendments to the bill. Among them, hindi na po yung Pangulo yung chairman. It will be the Finance Secretary, additional private sector members to the board of directors. I think 4 or 5 SSS and GSIS will no longer be compelled to produce funds for the fund, but BSP will have to fork over its profits. Anong tingin niyo, sir? Is this cautious enough? Is it already on the level of prudence, or medyo ano pa rin? The risk is still high?
Let me, rather than react to
Yes, sir.
what seems to be people trying to get this to be palatable, I think we should look back. And first, why are we doing this in a ready, fire, aim manner?
Mm-hmm.
If we were to do something as important and substantial as this, and I'm not against it, by the way, I think there are rich, poor, in between countries, many do it.
Certainly,
But
yes, sir.
let's understand first, what is the purpose? Because if you listen to three different people who are influential in this, they have three different overviews. The president says, I want the development fund to spur economic development.
Mm-hmm.
You look at the bill as previously filed, it's a global fund where they will make international investments so they won't lose money, this and that.
Mm-hmm.
So one is a development fund. The people filing the bill in Congress seem to want to create a global
Investment fund.
asset management fund. And then if you listen to Senator Marcos, she's saying if we are using retirement money, and now they've taken that out because of what she said, which was frankly correct, we should not put retirement money at risk. A pension fund, which is the precursor to many of these funds, are basically yield and return is secondary. Safety is primary because you're not trying to create the best performing fund. You're trying to ensure the viability of a retirement package and its actuarial standards. So first, what are we doing? Which of the three? Are we doing a development fund? Are we enhancing retirement returns? Or are we trying to create a global investment company? They require different skills. They apply for different needs. And so I'm not worried. Prudence, management, controls, principles are all critical. But it is the second decision. The first decision is, what are you trying to achieve? Now, I think what is appropriate for us at the stage we're going to try to do something is a development fund. Now, let's also understand what we are talking about rather than look at what is the popular name or anything. Like, for example, people say Temasek. Temasek is actually not a sovereign wealth fund.
Yes, sir.
It is more like what would have been NDC. It started out with the assets, corporate assets, the government owned or inherited. And Temasek was told, create value, enhance value, and develop this further. And they developed them, most successfully, some not as successfully, because that's what happens when you have several assets. Not all of them will do well. And then when they became more successful and bigger, they used the profits to make it bigger. And when they needed more money, they borrowed money. They went to bonds. So they never used one of the three traditional routes to a pension or sovereign wealth fund. One are pensions. The other are windfall profits like that come from
oil or gas,
resource rich, something like that. And the third, and even like Nauru, from its minerals. And the third would be surplus from reserves. Now, we also have to be a little careful about reserves. All countries have reserves. The question, are the reserves from surpluses or the reserves because you borrowed the money to build up your reserves? We have not explained what type of reserves we are, because like the government and the central bank borrow money to fund things and to build up the reserves so that we can fund our export, imports, and so on. Now, so reserves that come from borrowing are not free. They cost money. Reserves from surpluses and balance of payments are a different story. So first you have to look at all of those and decide with that, what do you want to do? The second thing is when we look at what would be the equivalent of sovereign wealth funds like the GIC or CIC in China or the Norway Oil Fund or in Malaysia, Kazana and EPF. EPF is Employee Provident Fund, obviously retirement money, pension money. Most of them started out, like Temasek started in 71. GIC in 1981 or 82, I can't remember the exact year. Are we looking to create something circa when they started, where they are today, or something in between? Because Temasek and GIC had 50 and 40 years to find their way and grow. So what stage and what complexity are we thinking of doing? Now, the other thing is, there is not a shortage of private equity firms, global and regional, in this space. I don't wish to talk my book because I'm a senior advisor to this company. PAG is reputedly the largest private equity firm that only invests in Asia. They have managed $50 billion. Okay? Now, the global ones, KKR, everything, Carlyle, they manage trillions in private equity. Now, you can say we're not really being private because private equity means you invest in unlisted companies with the hope to exit them through a sale or a listing. Development fund can be public, not public, but it's focused in home country investments.
Okay.
Private equity is global, regional, wherever you want, or there are single country private equity funds. So there hasn't been, in my view, a proper discussion and vetting of what are we aiming for. Because there are three things that are complementary and contradictory at the same time. A development fund, an asset manager, or basically helping the pension funds make more money. They have different goals, they have different risk parameters, but most important, they have very different expertise. So all of them have safeguards, prudential work and all that. But what underlies all of them? They have very highly expert teams who are compensated very well on performance to make the investment decisions. If you're putting all these prudence and safeties in, but you're making the wrong investment decisions because you're not competent or at a level equivalent to the people who will be competing to make the same investments, where are you?
So bali bawal ang 3-in-1.
I mean, they're contradictory goals. I like to eat steak and
Stephen, sorry. This is Regina. Let me just jump in because I think I have the answer to your question. And it's coming from the press release that the economic managers released today after the House, the meeting today. And they said, this is going to be a vehicle to move forward the agenda for prosperity and achieve the economic goals of the administration. Ergo, number one in the three options that you enumerated. Development fund, it sounds like they want it to fund big ticket infrastructure and help them achieve the medium-term fiscal framework, 8-point socio-economic agenda, basically. So it sounds like a development fund, right?
Why did the original bill have foreign investments in and asset management? That's my point. It's the ready. Normally, before you do a bill, at least, I'm a lapsed lawyer, you go on 3 readings, you do a study, you do hearings, then you do the first. Why are we filing a bill, then changing it, rather than have the proper study and analysis of what the objective is? Then the first bill should not have been filed that way if the objective is development. And there should be much more robust discussion on what that means, what are the parameters. And let me be blunt. If it's a development fund, which I actually believe we need, okay, if it's properly done, there will be losses. You will hope the gains over time will exceed the losses by a sufficient margin. But every private equity firm, every development fund, that's not full hits. We have to educate the public that this is what happens. And we're seeing it as a bit of a magic bullet that will solve things, when it is a painful process that, properly handled, overall leads to success, development, and profit. But it is not a sure thing, and it's not a certainty.
When you're talking about losses, that will contradict what Stella Kimbo said, no? She said they will be investing in high-yield instruments. Pero at the same time, there's another confusion there. They're saying they will not invest overseas, only domestically. What's the investment climate now? If it's high yield, it's also high risk, right? Normally. So what's the investment climate anyway, overseas, right now?
Well, for me, investment climate overseas is like the investment climate here. There are good opportunities and bad opportunities, and it's the intelligence with which you make it and the breadth of what you do, so that the good investments will hopefully outweigh the bad investments. Because I buy stocks, not everyone makes money. Some lose, some make. I hope I make more. But I think if we're listening to what, I've not met any of them, although I have spoken on the phone once with Representative Kimpo, who I think is a very intelligent and learned person, who I have a high opinion of in general. I think if we want to do a development fund, then there's frankly no need for international investments. That is an asset manager's job. And frankly, SSS and GSIS can make that already on their own in a prudent mix of how they want to carefully but steadily increase the return from the funds they are managing on behalf of retirees. So again, as I said, there's a bit of confusion on what we want to do. Is this a development fund? Is this an asset manager? Or is this something hybrid in between? Now, I think given the state of where we are, the most important need right now is to spur local development in an intelligent and prudent manner. But I go back to my bigger question, which is, we're talking about processes, but the most important thing is the qualifications and the guidelines for the people who will actually be making the investments. It's not the board who makes the final decision. It's the managers who will be vetting, assessing, and negotiating the terms. Those are the people who really matter in different firms.
There are also concerns about the safeguards. I mean, written in the safeguards for transparency, auditing.
No, look, Ami, I agree with all of that. There are standard rules to do that.
Yeah.
But before you deal with the safeguards, are you making the right investments? You can have the right safeguards and pick all the wrong companies and stocks. Nobody's discussing the qualification of the actual team, fund managers, who will make the decisions on which stocks, which companies, which opportunities to pursue, which terms to put them in. And no one's discussing that. And if you look at the successful private equity firms, because this is sounding like a developmental fund in private equity, not in listed companies, because listed companies already have the money they need. They're public, unless there's a new project and you partner with them on the specific project. Now, if it's that, there are teams which are even broken down by industry and geography in these different private equity firms to look at that. Like KKR has a fund that is just infrastructure. They have a fund that is just med tech. They have a fund that is tech. They have a fund that is general industries. So this is the level of expertise and analysis and specialization done to do this. So I think we should narrow the focus. It should be manufacturing and infrastructure and domestically, but that's just my view, all right? Given what is the pressing need. Because let's go back to the genesis and development of GIC and Temasek. They started up making investments in Singapore. Either companies that they inherited, which was Temasek, and using the reserves from the balance and payment surplus that GIC was managing. When they got bigger, that's the only time they started going abroad. And after Singapore had reached a level of prosperity. Now, then what did they do? Initially, rather than do it themselves, they invested in asset management companies, their funds, and private equity firms. Then, as they got bigger, they said, we'll still do that, but we'll also start making the direct investments ourselves with our own teams. So what I'm saying is, they took 40 to 50 years to reach the stage they are. And they started domestic first, then investing in the people who know what they're doing. Then after the experience of watching that for about 20 years, then they said, let's continue to do that, but let's start doing it on our own too. So what are we trying to do?
Yes, sir. Sir, if we do aim for a development fund, how should a country like ours fund it? Considering, like you said, be ready to lose or take hits, especially at the outset. How should we fund it? For example, BSP is being listed as one of the primary sources, also DBP and Land Bank.
Well, again, my point is you need a clear purpose. You need qualified fund managers. Never mind the board overseeing it. That's important, that's needed. But before you get to that, you actually need expert fund managers who know what they're doing in their field. You know, people who, like, I'll give you an example. GIC, in the 3 companies that they did 5 deals with, okay? It was each time, it was the private equity side, because they were unlisted, that put the money in. When the 3 companies listed, they sold some of the shares in the IPO, and some they kept. The ones they kept were no longer managed by the private equity side. It was transferred to the public equity side, because the way you analyze and monitor and decide whether to invest in an unlisted company that is not yet public is very different from whether to buy, hold, or sell a listed company. So they even transferred it from that group to another group whose expertise is that. So the answer I'm giving you is a long-winded way of saying it's very complicated. And we should basically say, what do we want to concentrate on? What are the parameters? What are the industries? Let's hire the people, not the board, that's important, and the prudential principles, that's important, but let's hire people who are actually qualified to do this. Or if not, partner with PE firms, private equity firms that know how to do this on a joint basis. Because you need that level of expertise, because you might be taken, frankly, not even for corruption reasons, but just for best practices and competence reasons. If you're doing something off market just because you're not aware of what is going on and how these are being negotiated and priced regionally, you will basically either get very poor, you might give away too much, or you might be giving too little, and then nobody will want to take it because the competing PE firms will offer better terms than you. And if you offer too much better terms, then maybe you'll be investing in bad deals or bad structures. It's a balance, but it starts with the competence of the fund managers and the team doing it. And to get the right fund managers and team, first you have to pay them. But second, you have to be clear what your purpose is. Because even these firms don't have a one-size-fits-all fund management team. They already have specialized teams. Like if you want to do infrastructure and you go to one of the global firms, you will not go to the CEO of the firm. Even if you go to the head of Asia, he will pass it on to the infrastructure team. You want to do branded food, they'll give it to the consumer team. You want to do med tech, they'll give it to the pharma and biotech team. So what I'm saying is these are very highly specialized and complex things.
Stephen, the other thing that I wanted to point out about Temasek is that actually they've lost billions and billions of dollars over the years.
No, but they made more, in fairness.
Yes, they have, but they've also made a lot of mistakes. And I would know because I used to work for Channel News Asia, and we used to cover Temasek a lot.
And they're open about having made
yes,
losses, and
they have.
And they have reversed strategy at times.
Correct.
From the losses, but that's my whole point.
Yeah, but
It's not a
the point as well is that
Even the geniuses.
correct, exactly. Even with the geniuses, even if you pay the best fund manager in the world, it doesn't insulate you from losses because that's just how the market works. But my question to you is, let's assume at this point it's going to be a development fund and that they're going to invest locally. Do we have the local expertise to manage it?
Okay, if I don't think, honestly, we don't. All right, number one. Number two, it doesn't mean we shouldn't do it. It means maybe we hire them not to be the sole decision makers, but see, like you can have the people domestically who know the companies, know the markets, know the local play. But then you probably want people who have the direct expertise in negotiating, structuring, and pricing this, working alongside them. That's what people like Temasek, GIC, Kasana, EPF all did. They combined the two with regard to the fund management and the investment criteria and decision making. And I frankly am not hearing any of that in the discussion of what's going on. And I think that is the most critical. Like, for example, for public equities, for the longest time, it was Peter Lynch and Fidelity Magellan who was the star. People were putting it because they believed in Peter Lynch and the team that he assembled, that he would outperform the market. It wasn't just, oh, let's do this and then the profits will follow.
If we have weak management skills.
I don't want to say weak, okay? That's unfair. I guess like you cannot expect, if there has not been a plethora of these opportunities domestically, to expect people to instantly have it. This is not something you do or we do, all right?
Yeah.
But at the same time, some of these, let's say, recognized regional fund managers may not have the domestic expertise and may not have the, frankly, agenda that needs to be fulfilled, expertise in doing that. So what a lot of the smarter funds did was to combine them.
Well, what do you say to the suggestions that this is just not the time for the Philippines to embark on this kind of fund?
Well, it's not that it's not the point. It's how do you do it and with who? I would think a narrow-focused development fund, specific industries. Obviously, we're not going to put it in real estate. There's enough people there who are well capitalized. But areas that could use it, which is certain key basic manufacturing and infrastructure, would be, in my view, relevant. Mining as well, and value-added mining. Those would be relevant areas. Now, as I said, you combine the two. You get proven fund managers who may not be from here, and you have recognized experts in their field who would be not so much industry experts, but more country experts and people who know that industry, combining with the people who know how to structure, fund, and price this. Because if you're, especially infrastructure, you're basically looking for a long-dated return. Now, you're going for infrastructure, you're looking for a low teens return. You're going for manufacturing, you should be going for a 20% IRR. So even the returns you seek vary depending on the industries you are seeking. You expect a higher return, let's say from a tech company, than you would from a toll road. But you don't, that's why you don't have a one size fits all, and you need focused strategies. And given, we should first decide what is our priority area that we want to do. Second, let us then have the right teams to manage it. Not so much, not so much. the principles are important, the safeguards are important, the prudential things are important. But first, they have to make the right decisions, chase the right opportunities with the right terms and structure. Nobody's discussing that.
Sir, I'm getting so much from you. I'm wondering if any of the committees have invited you.
First of all, I'm 63. I've never been in government. Many people who know me very well say I'm not a very patient person, so I'm not the right
No,
person.
sir. I mean, at least as a resource person in the committee hearings, I just had a committee hearing.
I mean, look, this is what I'm saying is not rocket science or revelatory. I mean, Regina would know. This is just something that has to be threshed out and handled. I'm not basically unveiling a whole new world of different things. I'm just stressing in the balance of the discussion, looking at this comprehensively and holistically, we are not discussing that. And I think that is the most critical. Breadth and purpose, number one, quality of the people, who will be analyzing this, funding this, seeking this, structuring it is number two. Then you overlay the safeguards, who you source it from, who you fund it from. You start out with what you want to do, who you're going to do it with, and how you're going to do it. Then you put the superstructure over it.
Yes, sir. Which is why I was
Any
asking.
issues?
Go ahead.
Any issues you see with Finance Secretary Ben Jokno chairing the board? Any conflict of interest issues that you see?
Well, I mean, again, chairing the board, I'll tell you bluntly, the chairman actually does very little. We're concentrating on the superstructure that basically, like, for example, let's use a very analogous example. The bank's credit committee. In the end, the chairman and the CEO and the board of the bank votes up or down for the loans. Do you think that's the most important part? Or it's the corporate banking and commercial banking people who are doing the assessment, the credit analysis, and then bring it to the board?
But won't he get veto power over the final allocation of the funds?
He does or he doesn't. If he makes a fool of himself or he's a star, he will receive the criticisms or the rewards. But it's what gets to him. He's not going to be there doing due diligence and negotiating the terms. Nobody's talking about that part. And that's the critical part.
Yeah.
So in the end, who is the super board that gives the final yes or no? It depends on what the quality of what is brought to the board first and the terms. That's why Peter Lynch didn't run Fidelity. He just was the head of the Magellan Fund. And he had a team that did all the analysis for him. And in the private equity firms I deal with and the venture capital firms I deal with, it is the same thing. The actual senior management has a very important role, but they only assess what is given. Who does the initial assessment? The scoping, the marketing, the analysis. That is even more important.
Thank you for watching this special edition of The Chiefs. Happy New Year sa ating lahat. Ako po si Robbie Alampay.
I'm Ami Pamintuan of the Philippine Star.
I'm Ed Lingao.
And I'm Lucy Cruz Valdez. We are One News, all sides, all the time.